Welcome back. The big day tomorrow, the monetary policy from the Reserve Bank of India. The MPC, the Citizens MPC that CNBC-TV18 holds, was split down the middle. It was a 3-2 in favor of a rate hike. Our poll of economists, the broader one, actually showed that 90% are expecting a rate hike. So perhaps more than the rate, it is the contentious part could be what Reserve Bank says about the stance. If they continue with withdrawal of accommodation, it will mean that there is one more rate hike. If they go to neutral, there is a certain definiteness that we have reached the peak. Will RBI want to be so sure that the last of the rate hikes is over? Those are the questions that the market is grappling with. And to help us understand it better, we have a veteran economist, Chetan Ahya, Chief Asia Economist at Morgan Stanley. Chetan, good morning, and thank you very much for joining us. So your expectations, rate, and will they go that far to say that this is the last?
Well, we think that they will do 25 basis points rate hike. So, Lata, we are in that 90% of your surveys rather. But, you know, in terms of the stance, I think there are a lot of uncertainties around inflation outlook as well as what happens to the Fed policy. So I think RBI may not want to give it a clear signal that they are done. Most central banks around the world, RBI, Reserve Bank of Australia, yesterday also did the same. They paused, but they say that there would be a possibility that they would do more rate hikes. So I think that it would be probably unlikely that the RBI gives a clear signal that this is the rate hike, this is the last rate hike. But look, in our forecast, we do think that this is the last rate hike.
Okay, your forecast it is, but Reserve Bank may still want to keep its cards close to its chest. Okay, you know, I have an Asia and a global economist with me, so I don't want to spend so much time on India. More the global ambience. Chetan, how are you looking at the recent events in the United States and even for that matter, Credit Suisse in Europe? How much are you expecting it to impact India's and Asia's growth?
So out of US and Europe, Lata, I think the US banking system developments are more important for Asia and for India. And as far as the developments there are concerned, look, I think the biggest issue that happened in the US is the interest rate shock. The reason why the banking system is going through this stress is because households and the corporate sector have turned out their debt. Either they don't have high-cost borrowings. They've actually taken low-cost borrowings when interest rates were low. But when interest rates are going up, liability costs in the system is going up, and the entity which is facing pressure is the banking system. And so what we are going through is the tightening of lending standards that will come through as the banks are going through this pressure of rising liability costs. At the same time, they have been holding those, bonds or securities which were borrowed by the households of the corporate sector at low interest rates. So their margins are under pressure too. So this is going to result into a slowdown in domestic demand in the US, and therefore that will mean that external demand for Asia and India will be affected.
Okay. Are you changing your India GDP forecast?
So we think India's GDP will still be in this financial year ending March 23 at 6.2%, sorry, at 7%, and then the next year will be around 6.2%.
Okay, you're not changing it because of the headwinds from the global demand?
Well, we have built in that, and underlying, we think India can actually grow at 6.5%, but this weaker external demand will take some sheen off, and that's why we think growth rates will be closer to around 6.2. Look, I mean, if there is a deeper slowdown in the US because of this tightening of lending standards, you could shave off some more of India's growth. But broadly, the India story is really the best in the region, and also, in fact, I would say amongst the large countries in the world, India story really stands out. And yesterday's PMI numbers were really telling. It clocked the highest PMI for manufacturing in the region, and it is in terms of the number of months that it has been at these levels, it has been quite strong. So we think India has got this demand-driven story, which is holding up the overall growth rates, and that will continue to be the case. Nowhere in the world where we have this confluence of cyclical and structural factors driving growth as we are seeing in India.
Fair point. But we just had Bajaj Auto on the channel, and they were reporting fairly weak external demand. I mean, the exports have done pathetically, but of course, domestic demand has done well. So, Chetan, I want your views on India's current account or even trade deficit. We've done exceptionally well in services exports. Goods exports, April, February, or just February alone is 9% lower than February ago. But services exports are 37% higher in February compared to the previous February. So your thoughts, I mean, do you think that this is a new line of GDP growth, services exports?
That's right. I think the services exports have been doing extremely well, and they have surprised on the upside. And the market share for India has now gone up to about 4.7%. And if you look at the chart for market share as well as services exports line YOY, it's showing nearly like a vertical line over the last 18 months. So this pandemic has been a massive moment for India's services exports. Because, if you could work from home, you could work from anywhere in the world, and that's really accelerated the outsourcing to India. And what we are also observing is that a lot of the multinationals, especially in the banking and financial services sector, have increased their headcount in India dramatically. So this is not just the IT services companies, but the entity of the multinationals onshore domestically in India has gone up in terms of the headcount quite dramatically over the last 2 years. So we think that services sector is really the most important driver of current account at this point of time. And at the same time, we have also seen some upside surprises in the remittances inflows.
Yes.
So together, that's helped to keep India's current account balance in a reasonable shape. We're expecting it to be 1.9% in 12 months ended March 2023. And March quarter could end up even showing some marginal current account surplus now with the rate of growth in services that we are seeing.
Oh, so the quarter that just ended, we are likely to report a current account surplus. Have you lowered the current account deficit for the current year also, the one that began on April 1st? Will the current account deficit be something like 1 point something?
Yeah, so we think the current account deficit going forward should be more in the range of around 2% in the near term. And, Pasna Chacha, our Asia Economist, is quite bullish on the outlook of the current account going forward because of the structural factors of productivity growth improving and boosting saving rate on a medium-term basis.
That brings me back to the monetary policy, Chetan. There is one worry less. Until now, one always thought that you can't stop hiking when the Fed is still hiking because that will create capital account disturbances. But since the current account is now strong, do you think the Reserve Bank has to worry less? Okay, the Fed may stop at 4.75 to 5 or at 5 to 5 quarter or at 5 quarter to 5 half. We don't have to worry so much. So can the Reserve Bank call it peak on rates?
We think they may not say that explicitly, especially in this monetary policy. But as I mentioned at the start, we are expecting this rate hike to be this policy meeting rate hike to be the last rate hike. And to answer your question straight away, yes, it's true that it's possible for RBI to pause even while the Fed may continue to do some more rate hikes. And that's because, we've already done it so far. In fact, all of the central banks in the region have not hiked as much as the Fed has hiked. So just look at the stats here for the overall Asian region. Asian region has increased policy rates, including China, by just about 100 basis points, whereas the Fed has increased policy rates by about 450 basis points. 475 basis points. And if you take out China, then the weighted average increase is about 240 basis points. So Asian central banks have already done it. The question that you're asking is in the actual historical facts that we have done less rate hikes than what the Fed has done. And I think the bigger answer to your question would lie in the way inflation outlook will pan out in India and rest of Asia. So inflation has been running at half the run rate of US and Europe for the region as a whole. And inflation has already peaked. It has been largely driven by cost push factors, i.e. commodity prices, and commodity prices have already come down. So we should see deceleration in inflation in India too. And that is the reason why RBI can pause at 6.75%.
Okay, just a very quick last question. Where does your global team stand in terms of the problems in the US? We yesterday saw the number of open job positions fall below 10 million for the first time in a year or so. Is there a fear that with the banking sector also very, very risk averse and cash strapped, there could be a harder landing than the market is prepared for?
So that's a risk scenario for us too. But in our base case, we are expecting significant slowdown in loan growth in the US. So loan growth has been running around around 10% right now. We expect that by the year end, it will decelerate closer to about 4%. And there's a possibility that, situation gets worse. I mean, though at the margin, things are stabilizing as far as the small banks are concerned. But if the situation does deteriorate and loan growth moves into anything in the range of contraction, that would cause a harder landing than what we are building in right now. And of course, that's really dependent on what happens to one of the key sectors which we are watching in terms of the lending situation. That's the commercial real estate lending.
Fair point. Okay. Well, more on that later. Chetan Ahya, pleasure speaking with you. Thank you very much for giving us the Asian and the global backdrop in which Reserve Bank will have to announce its policy. They may not say it's the last hike, even if it is the last hike. We'll wait and see. We have to wrap up on Bazaar on that note, and Chartbusters is ready to give you the trading ideas coming up.